everyone, and welcome to a very special edition of Commodities Now right here on ET Now. I'm Mubina Kapasi. This is our special Diwali coverage of all that happened in the world of commodities. Now, interestingly, all commodity prices have recovered by the third quarter following steep declines that we saw in the year due to the COVID-19 pandemic. Crude oil prices, in fact, which by the way hit negative $37 per barrel in April, have more than doubled, supported by a cut in oil supply. But prices still are more than one-third lower than pre-pandemic levels. Metal prices have managed to recover rapidly in response to a faster than expected pickup of China's industrial activities. Food prices as well around the world have risen. Looking ahead, oil prices are expected to increase gradually from current levels and average $44 per barrel in 2021, up from an estimated $41 per barrel this year, as a slow recovery in demand is matched by ease in supply restraint. Gold prices, meantime, have of course been boosted by the pandemic and policy responses. But on the other hand, we have seen a surge in food prices. So lots, like I said, that happened in the world of commodities. But what are the big four events in the world of commodities during the last Samvat? My colleague Avan Dabas joins in.
Well, let's take a look as to what have been some of the biggest events in the world of commodities in the last 4 years. Well, let's just start off by talking about the kind of surge that we've witnessed in commodity trading. Over the last few months, the numbers really tell a tale, and especially within the months of June, July and August of this year, you've seen some massive traction coming into the MCX total volumes. Take a look as to what we've clocked in the month of June, about 6.2 lakh crores, July about 8.5 lakh crores, and August a whopping 9 lakh crores, and that has grown substantially month on month. Even in gold volumes, there has been a massive surge in the terms of the volumes, particularly in the month of August at 2.5 lakh crores, but even September has been stable at about 2.2 lakh crores. You saw June clocking in about 1.8 lakh crores. So clearly there has been a lot of traction in the trading volumes. But getting a move on, another big trend has been the way commodity prices have moved. People who don't even track this have definitely been noticing, waking up and taking notice as to how gold as well as silver has not just inched up, but has soared. Take a look as to what you've seen in by way of levels. Who would have thought that gold would have been valued at about 55,000 rupees and silver hitting prices of nearly 76,000. So clearly there's been a lot of safe haven buying that you've seen in these two asset classes during the global economic crisis. The unlimited money printing in the global central banks has been another factor that has aided this move. The fact that you've seen a major drop as well in the dollar index and a significantly undervalued silver has finally flexed its muscle, showed its might, and has seen a massive move. Number 3, as way of a trend, is crude oil prices. Without a doubt, that has been making the headlines, and theoretically you've had it sounds like the producers would pay buyers to take oil off their hands. We've seen levels of nearly $37 to a barrel. So a number of factors can be attributed to this: the sharp shortage that we've seen in oil storage as well as in tankers, as well as the price war that played out between Russia and Saudi Arabia. And not just that, the final trend that we've seen in the world of commodities has been the Baltic Dry Index, which has gone ahead and hit a one-year high. This despite the fact that we've seen a global crisis play out. There's been a lot of resilience despite the global trade, and that can particularly be attributed to China's increasing imports, which catapulted the shipping index. So these have been some of the key trends in the commodities universe in the last Samvat.
Thank you, Avan, for that. Well, let's talk about gold. How can we ignore the kind of move this shiny metal and a favorite among Indians for more reason than one has given? 55,000 rupees. And it's like Avan mentioned, the pandemic that's triggered this flight to safety among investors, lifting gold prices, which of course, as we know, is a safe haven asset. Further, even the US dollar has boosted this asset quite significantly. And then you also have the decline in interest rates. But can this asset continue giving great returns? Here are the global commodity gurus as well as ace investors sharing their view on gold.
I think gold, I am very bullish. Combination of factors, the biggest bullishness is, I think, that see a lot of the emerging world, China, Russia, They have large foreign exchange reserves, and I think for strategic reasons, they don't want to be, they want to limit their dollar exposure. So their percentage of gold in the reserves is going to go up constantly. Second, also, it's the best hedge in an uncertain world. And the fact is that a lot of people suspect that this low interest regime, they feel that, it's at 1% interest, 0.5% is better to hold gold. So I don't think the lure of gold is going to go away.
I would say in the current condition, silver is relatively inexpensive. Platinum is very cheap. The silver and gold, they will move more or less in the same direction. Will Google move up more than Apple, or Apple more than Google, or will Google move up more than Amazon, or vice versa? Who knows? It's like, I think at the moment, if we look at value among the precious metals, I think that silver is more attractive than gold. But I have most of my holdings in physical gold and not in silver, because my safe deposit boxes are not big enough for the silver. I have to concentrate on gold and platinum. So, but I think as a trade, I think silver looks very attractive here.
I don't expect to sell my gold and silver for a long time. I hope that my children have my gold and silver someday. No, everybody should own gold and silver, and I expect gold and silver to do very well in the next few years because there's going to be more turmoil, more chaos in the world economy and in governments and with currencies. No, don't sell your gold, don't sell your silver. I plan to buy more when this current correction ends. I hope I get the timing well enough.
Okay, well, of course, pretty optimistic views largely coming in for gold and interestingly even silver as well. Now let's introduce on the show Soma Sundaram PR, the Managing Director for India World Gold Council. Thank you so much for joining in, and I think the question on everyone's mind right now is that will gold continue from here on at 55,000 rupees, or well, it's actually come off a tad bit from there, but nevertheless at 50,000 it's a little expensive to buy, so it's pinching a lot of people's pockets, but they want to know, is it going to be worth it? What does your prophecy say, sir?
See, there will be definitely a spike in demand because things have become much better than the Q2, which was a washout, Q3, which was a partial washout. Clearly, we saw a big drop. Q4, which is of the calendar year I am talking about, which is the Diwali quarter, we will see demand increasing significantly. But still, it is unlikely to be anywhere close to what we have seen in the previous years. Last year, this December quarter, we saw 194 tons. I don't think that level of sales you will see this quarter. However, it will be much better than the 86 tons we saw in the September quarter.
What's interesting is the fact that jewelry demand has declined quite a bit, and I think it was a bit on the lower side even prior to COVID. Now you have prices that are so expensive. We have the upcoming wedding season as well coming up. Do you think that jewelry demand will stay on a bit of a lower side?
Well, the price of 50,000 has been breached long ago, and that definitely puts pressure on the wallets of people, particularly at a time like this when your income anxieties are much higher. So there will certainly be a lot more thought going into buying a jewelry which has a higher labor charge. So you would therefore definitely see more people flocking to buy a bar or a coin where the charge, and in addition to gold, will be much lesser. We saw that in Q3, and I'm sure we're going to see that in Q4. In any case, Dhanteras is a time when most people buy a lot of coins. So you will see that jump happening. But you will also see jewelry, purchases coming back because weddings are coming back, a little bit of celebrations are coming back. So you will see jewelry purchases coming back. But yet at these prices, people would want to buy more gold with the same amount of money. And that can only be offered when you have a bar or a coin.
All right. Mr. Somasundaram, now, we have the upcoming festival of Dhanteras, which is, of course, considered very auspicious to buy gold. But would you recommend our viewers to go a more modern way when it comes to buying gold? That's buying ETFs or subscribing to the sovereign gold bond scheme as well. That's open for subscription over, the usual coins and jewelry.
Well, they are already doing that. Many of the organized retailers are giving you experiences on the digital front, which have not been heard of before. Clearly, some of this will stick even in the post-COVID era. But whether they should completely go with this type of buying is, I would probably not... I wouldn't see this happening in India, because see, gold buying is both an experience of buying as well as wearing. You can't remove one and just say that, buy it all digitally. Digital is there to stay. Digital engagement, digital buying, digital online buying is there to stay. But I doubt it would ever overtake the brick and mortar style and people going with families and friends and looking at various designs and buying. That's an experience in itself, and that can't be removed from gold.
Well, Mr. Somasundaram, it was lovely having you with us. Thank you so much for joining in. Okay, well, shifting focus from gold to oil. While gold did see a rally to record high levels, oil saw a downtake to record low. And when I say record low, I mean negative $37 per barrel, a phenomena that all of us wouldn't have even imagined just 1 year ago. The collapse in oil consumption in March and April because of, the sharp fall in oil prices in turn. And in response, we saw many oil producers cut production. Most notably, of course, is the OPEC and its allies. A record cut in production is what they agreed upon at almost 9.7 million barrels per day. That's 10% of the global output. But the CEO of British Petroleum, Bernard Looney, believes that oil will be around for decades. And yes, oil demand may have peaked, but that is not the end of the oil story.
People they confused peak oil demand with somehow the end of oil growth with somehow the end of oil. And that may be wishful thinking in some people's behalf, but the end of oil growth, whether it happened last year or whether it'll happen sometime this decade, does not spell the end of demand for oil. And oil will go on to be a considerable part of the energy mix for many, many decades to come. And there will have to be an incredibly capable oil industry to make sure that we invest into that, to make sure that that is the best that it can be and it has the lowest emissions that it can be. So yes, it's garnered a lot of debate. They are scenarios. There are as many scenarios that say it already peaked as the scenarios who say it'll peak in the future. And peaking of oil demand does not mean the end of oil. Oil will be around for a very, very long time.
Okay, well, we've touched upon gold, we've touched upon oil, but guess what? The commodity complex story is not yet over. So we'll do one thing, we'll take a very short break and we'll be back with lots more.